So for the last 6 months, we saw a total return of 4%. We saw an increase in our EPRA earnings. The NAV was up to 92 pence per share, and we saw dividend cover of about 125%. In addition, over the period, we reduced gearing, and at the same time, fundamentally, the underlying property portfolio has performed well, continuing our longer-term track record of outperforming IPD MSCI. Picton is a diversified investor in UK commercial real estate. At the minute, we're positioned very much overweight industrial warehouse logistics and underweight retail. That's clearly contributed to performance, where actually you're seeing good rental growth very much coming through in the industrial sector, driving capital values. Offices, a similar theme, but perhaps the growth is not quite so strong. And then the retail sector, which, as I say, is an area that we're relatively light on. We have seen, a write-down in some parts of that market where there's been quite high-profile retail failures over the last 6 months, and that's had an adverse effect. In terms of future outlook, I think things are going to continue in the current way, and so very much, rental growth being driven by markets where there's good occupational demand and limited supply. So we can see that quite clearly in the industrial and regional office markets. It's undoubtedly going to be tougher in retail, and I think that's still got some way to go despite the sort of weakening price. So in terms of us and the outlook, it's very much capturing income growth through resetting rents to market levels, and also capturing reversion through leasing of vacant space. And I think overall we've got around 6 million of reversionary potential in the portfolio, and that's something that we're very much working towards capturing over the coming 12 months. I think we're in quite a good position currently. Over the last 4 or 5 years, we've gradually reduced gearing within the business. That puts us in quite a strong place from a balance sheet perspective. We've got undrawn revolving credit facilities that gives us sort of instant access to capital. So we still continue to look at the market, and as we look forwards into the next 12 months, there could easily be opportunities arise if there's any sort of volatility, and we're in a position to take advantage of that. Picton joined the REIT regime on the 1st of October, and as part of that change, we also changed our listing status from an investment company with an investment manager to a traditional commercial company. That, I think, provides us with quite a bit of operational flexibility in the way we do things. It streamlines our business, but insofar as being in the REIT regime is concerned, there are savings through being in that that will flow through to the bottom line in terms of effectively a reduced tax bill. One thing worth mentioning, just as a result of those changes, whilst the corporate wrapper changes, in terms of our own portfolio strategy and the way we run the business, that's going to be very similar. So there aren't going to be dramatic changes flowing through to the look and feel of the business.